Welcome back to the show. Let's do some market education. Gives me great pleasure, as always, to introduce Mr. Corvin Codirla. And I've made a massive effort there to spell his surname correctly, or pronounce it. He runs FX Master Course. What I like about him is he's a former hedge fund manager and therefore one of the sort of rocket scientists that we've all read about. Corvin, very good morning to you.
Thank you very much.
Right, so we've got 13 slides, 13 thought-provoking slides. So let's kick off with the first one, the bad and the ugly about day trading. Tell me more.
I left the good out. It's a topic that was close to your heart and you asked me to talk about this. And there are a lot of people who focus predominantly when they trade FX on intraday trading. If we go to the next slide, the whole point about this presentation today is really to look at why do people do this, and they suffer or tend to suffer from the illusion of speed.
Yep.
Very much known as GRQ, get rich quick. And to really make money there, you have to face up to a lot of competition, and there's one factor that tends to burn people, and they're not really aware of that, particularly because they see Eurodollar has a 100 pip range, and it only costs 1 pip to trade in terms of bid-ask spread. But as you'll find out, that's what burns you, and that's where the competition really lies. So the question is, take a step back and trade in a relaxed fashion. And we'll come to something that I call the pain index, really based on some fundamentals of the market in terms of how they move. And you'll see that trading on weeklies or monthlies is going to reduce your stress completely and allow you to make a lot of money.
Understood. Okay, so let's move swiftly on.
So what's the illusion of speed? So the reason a lot of people go for intraday, especially the pros, is because low cost of capital. Remember, when you trade futures, your margining is actually a fraction of what it is to hold overnight positions.
Yep, good point.
Law of large numbers, you trade a lot of markets. And if you can trade a lot of markets, on average, you're going to end up ahead. So that means that even if you have a lot of losers during the day, your daily P&Ls tend to be up. So that means that you're actually smoothing out your P&L by trading very frequently, and you look really good to your customers, which is the main reason a lot of people go into this, at least from the pro side. From a private side, of course, it means that you're trading much more frequently, and you're falling into the trap of GRQ, get rich quick. But that's bad for your health, as we'll see in a second.
Okay.
So let's use the competition on the next slide. And what's always interesting is that retail investors are not really familiar with some of the names that appear here, but these are some of the biggest traders out there in the markets for almost every asset class. Obviously, Tudor Asset Management, but also Tower Research, Cubist, Jump Trading, XTX. These are some of the really big players that turn around billions of dollars a day. And how do they do it? They trade lots of markets, not just like 1 or 2 or 5 currency pairs. They trade hundreds of them. And if you actually look at their P&L, 70% of their money is made on good execution, not on good signals. And this is what people tend to forget and to use only automated software. So then put yourself in perspective and say, hey, am I doing any of these 3? If not, why am I in this game? So let's move over to the next slide, which really describes the effort you have to put in to make a lot of money. It's the ratio of profit to effort. So if you trade very high frequency, or intraday, you have a lot of effort and your profit, well, it's not going to be commensurate. I mean, think about this. A lot of these pros invest something like $5 million in their infrastructure. On the very long term, well, the problem is you might not necessarily need a lot of effort, but it's difficult to extract the right kind of signals if you're not good about it. And so in the middle, intra-week to weekly is where the juice really is.
Yeah, okay.
If you go to the next slide, I just want to make it really clear in a very simple trading system on the Eurodollar, what it means to trade intraday. So let's look at the 15-minutely time frame. And this is a really simple system, looks at the last 3 15-minutely bars and trace them according to whatever signal comes out using linear regression. So it looks like a fantastic signal, but look at your average profit per trade, 0.4 pips. So now what happens if you add a realistic cost of 1 pip bid ask, which is what you find, for instance, on the main exchanges. Let's go to the next slide. Boom. You're just bleeding money away. And this is the reason why people lose money intraday. They trade frequently. And imagine, if your cost is 1 pip per trade, you're trading 30 pips, Eurodollar has only maybe a 50 pip range on that day. How are you going to make it up? Next slide.
That's good, like that.
So let's now take a step back, look at longer term frequencies, dailies, for instance. So if you're not going to chase every wiggle, is there another way you can do it? And so the main principle, of course, is momentum. Go with the trend. So here's a very simple system that people can try for themselves. Plot out the ATR on Eurodollar, and if today from the open, which can be defined as 12 o'clock midnight.
And that's the actual true range for somebody learning this, isn't it?
So that means that it's the average high-low range over the last 14 days of this particular case.
Okay.
So if the currency moves by more than 30% off the open of the true range, go in that direction and keep it until the end of the day. You're not intraday trading, you keep it until the end of the day. So let's see what happens to this. Boom. You're not making money in a straight line. You can't make money without losing in this particular situation, but you're trading much less frequency, and your average income here is 3 pips per trade on a daily basis. So that means you're actually massively overcoming transaction costs. And you're making money, which over the last 5-6 years has been significant. Obviously, you can apply this to lots of different currencies and then aggregate them to a portfolio, which is what I always say to people. You can't make money off one asset class only.
Yep. Good point. Okay.
Next slide really talks about the pain index I referenced at the beginning. So imagine this. If you benchmark your pain to be on a daily basis of 1 unit,
Right.
yeah, how does your pain increase or decrease depending on your time frame? And this really depends upon volatility and the idea that we're really talking about a random process. Forgetting about the maths, what you see here is that as you increase or as you decrease the time between observations, to make it 4 hourly or 30 minutes, your stress doesn't increase linearly. It increases parabolically to the upside. It gets much, much more. So on 4 hours, it's twice as much. On 1 hour, it's 4 times as much. So your stress just goes way beyond proportion to what you have on
Never
dailies.
seen a slide like that. That's very simple, but very, very powerful, isn't it?
It is, and it's more or less, as I said, it's really based upon the fact that markets are random Brownian motions, and there's a relationship to the square root of time, which is very easy to implement and describe. But graphically, this is what it means. And then think about this. If this is how your stress increases, and stress and psychology is probably 80% of what you do in trading,
Yep.
look at what you're battling against, especially if you don't have an automated system nor a strategy that you can trust in.
Okay, so one question I have about this, your stress levels go down significantly.
Exactly, that's the other
longer
point.
time frame. But isn't this the excuse to put the bad trade, the one that always kills you, underneath the mattress because it's on my back book, it's on my monthly book?
I completely agree, and you see the pros do that as well. But the one thing a bad trade can do, or usually has the tendency to do, it's not going to hide for the next 2 years. It's going to blow up in your face probably within the next month. So that is definitely a situation. I mean, obviously there are lots of moving factors in here you have to bear in mind and measure your risk as well. The slide really goes to the fact that if you constantly look at the markets and constantly put on trades on a very high frequency, your stress goes beyond proportion, and that's going to impact your trading if you don't have a system.
Understood.
And as we saw before, to have a system, you require a lot of initial outlay, millions of dollars to get the computers right.
Yep.
So why even bother with that?
Yeah.
And the answer to that, as to how to make money over the longer time frames, is on the next 2 slides.
So it goes to the next.
Really based around an article I wrote on my blog. No, we don't have enough time to cover it here, but the idea is simple diversification and something that's called risk parity. In terms of, if you have a portfolio of equities and bonds, most people tell you stick 60% in bonds. Actually, you should stick 90% in bonds, 10% in equities, and leverage it up. And the performance is truly phenomenal. And Ray Dalio of Bridgewater, and he manages $150 billion, or AQR, Clifford Asness, he manages also $125 billion. They trade exactly this. And these are some of the biggest hedge funds in the world.
So 90% bonds, 10% equities using gearing.
Exactly. And how does that look like? If we go to the next slide, this is how the portfolio would have performed 3 times gearing over the last 10 years compared to the S&P. It's had some very nice behavior, rebalancing on a monthly basis.
Wow.
So that's the real key takeaway. Trade once a month and you can still generate returns and you can leverage up. Of course, you're not going to make $1 million in the next 24 hours, but it's a marathon. It's not a sprint. And I think that's really the main takeaway here.
That's a key component. Okay, so what is the call to action?
Well, if you like this presentation and you feel like you want to delve more into how pros trade, sign up to my website. So if you're not kidding yourself and you really want to make this a venture that will be profitable for the long term for you and you want to grow wealthy, do sign up. I have strategies, data, keep on updating the site, and keep on presenting thoughts.
Corvin, brilliant stuff. Thank you very much. That's Tip TV Education.
Thank you.
Right, let's take a very quick break and then we'll be straight back. Thank you.